The following podcast was recorded on Wednesday, February 8th, 2023, featuring Jim Bianco of Bianco Research discussing 0 days to expiration options. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to the latest edition of Talking Data. I'm Kristen Radosh with Arbor Research and Trading, joined today by our commentator, Jim Bianco of Bianco Research. Welcome, Jim.
Thanks for having me.
Today, Jim explains what 0 days to expiration options are and why they're so popular. There's been a big rise in 0 DTE options volume, which we believe to be a major driver of intraday market volatility. Jim, to start us off, what are 0 DTE options?
So yeah, it's not 0 dark 30, as Peter Chair of Academy Securities calls them, but it's 0 days to expiration. Those are options that expire today. Now, back in before 2010, we used to list monthly options. And that's what the VIX calculation comes from, and that'll play in a minute, that you use the VIX, you calculate the VIX off of options that expires in a month. So before 2010, 0 DTE was once a month, was options expiration, which was something that everybody also used to pay attention to because it used to affect the market. Then in 2010, we started to see the options exchanges list weekly options. So every Friday, they would or at the close of Friday, they would list an option that would expire on next Friday. So now we have 0 DTE options once a week. We had them on Fridays. In 2020, they started to list options that would on Friday that would expire on Tuesday and Thursday. So now, I'm sorry, excuse me, on Wednesday and Friday. So now we have options that would expire twice a week. 0 DTE, options on Wednesday and options on Friday. And in the fall of last year, around September, October, they finally listed Monday, Tuesday, and Thursday. So now we have 0 DTE options every day of the week.
And why are they so popular?
So if we go to the first slide, I will say, first of all, what this slide shows, let me explain this slide. It shows the most actively traded options today, the day that we're recording on February 8th, as of midday. If you look under name, you'll see that they're listed under SPY for the S&P 500 ETF, and then you'll see it says February 8th, February 23, P410. So that's a 410. That is a put with a 410 strike that expires today. So if you look at the list, you'll see February 8th, first 7 or 8 or so are all SPY. SPY typically is the most popular. It's the S&P 500, and they all expire today. Then you've got some Tesla options that expire on Friday, more SPY, more Tesla. The ETFs and the indexes are every day. The individual options are still weekly. That's why Tesla shows up on the list on for February 10th. But if you look down the list, you'll see the top 25 options. Maybe when you get to Nikola, towards the bottom of the list, when you see that it says 17th of March, those are really the only options that are in that 30-day range that the VIX is calculated on. And the VIX isn't calculated on individual options, it's calculated on the S&P 500. So the S&P 500 options that expire in a month, they're not even in the top 30. And so none of these options get figured into the VIX calculation. And if you look over towards the column that says IBM, that's the implied volatility. These options, like if you look at the first 8 options or so, they trade in the mid 30s. So their volatility is 33, 34, where if you look at the VIX index, it is currently trading at a volatility of 18. And a lot of people are looking at the VIX index saying it's the fear index, and it's trading at 18, and it's showing that there's no fear in the market. Well, the problem with the VIX is none of these options are part of it. These short-term options that are getting traded are trading in the 30s. The Tesla options, if you look at the VIX implieds, are in the 80s. So the Apple options are 36, 37 towards the bottom of the list, and the Nikola options, the NKLY options, are trading with an insane volatility of 244. So what is being traded is a much higher volatility than what is being used to calculate with the VIX. And a lot of people pointed out, a lot of the speculation in options has migrated towards these very short-term options, which are not part of the VIX calculation and trade at much, much higher volatility levels. So the VIX is somewhat of a misleading index, misleading in that a lot of the volume and the speculation that we assume is being captured by the VIX no longer is. It's all in these short-term options, which don't qualify because they're less than 23 to 37 days in that range you use for the VIX, and these options are too short to be part of the VIX calculation.
So how do you measure it?
Yeah, so now here's the problem. Everybody's exploring said, all right, 0 DTE options have exploded. Can I get a chart that shows what percentage of 0 DTE options are of all options traded? Not really. And what I mean by not really is the big data providers like the Bloomberg or the Options Clearing Corp or Cheddar or FactSet, people are asking them left and right, can you calculate more like a VIX for 0 DTE options? Could you tell me what percent trade? Then the answer is they've never really broken it out. Every day there's thousands of options that are created that expire that day. If you want them to go back over the last couple of years to try and calculate the options volume that are 0 DTE as a percent of all volume, that's several million options that they have to go back into history and calculate. And I understand from them, and we've talked to Bloomberg about this, as many people have, this is a gigantic coding complex operation to do it. Now they're doing it, but it's going to take some time. And all of them are trying. The Options Clearing Corp has the same problem. Now we can look at these daily numbers, and what we're learning from the daily numbers is that the current 0 DTE volume, current volume, is about 50% of all volume. All the other volume is in options that don't expire today. They expire Friday. They expire in a month. They expire leaps, which is what we call them, options that expire in a year to 18 months. Well, what percentage of that volume is in options that expire in a week? Well, the Bloombergs and the Options Clearing Corps and the FactSets and the Cheddars of the world are trying to calculate that right now. So we don't really have a precise handle on this, but we know it's huge. So we can only go from inference. And so if we jump to the next chart, what we see here, this is yesterday, February 7th. And what we saw in the market yesterday was Jay Powell spoke. And to be very honest with you, I thought it was kind of an inane kind of interview. Do people listen to you when you're talking at a restaurant? You play the guitar, you like reading detective novels, you ride your bike to work. I mean, there was a lot of that stuff. It's kind of sort of interesting. I mean, but that's not why we clued in yesterday. We clued in is, are you worried about that the financial markets have eased financial conditions too much? Are you going to stop raising rates at 5 1/4? But before we got to those questions, I had to hear about him reading detective novels first. But what happened in the market was, first the S&P went up 1.6%. Then, and that's the green thing that's the green highlight on the chart. Then, as the red highlight said, it fell 1.8% when he said, well, if the labor market doesn't cool down, we might have to go beyond 5 to 5 1/4. And then at the end of the day, it rallied 2.16%. Wow, that was quite a day. And we've seen this type of action over the last several weeks in the market, intraday swings of 1 or 2%. We had 3 of them yesterday. February 8th, the day we're talking, we had another one. We went down 1%. It's the middle of the day when we're recording this. Who knows what the next couple of hours is going to lead to with this market. So when people have asked, why are we seeing such huge intraday volatility? They're pointing towards 0 days to expiration options. Now, one other thing, Julian Emanuel, who's the head of equities and derivatives at ISI Evacor, has pointed out that they believe from their research that what's happened is the old Tina crowd, there is no alternative. You got to just have your money in stocks all the time and put it in ARK and buy the FANG stocks and the like, have largely given up on that idea. And now what they've done is they've taken all their money and they've put it in a money market fund that yields them 4.5%. They take about 10% of their assets and they buy 0 DTE options on spiders or on Tesla or on something else. Now, what's interesting about this is, what are the margin rules on 0 DTE options? Well, regulatorily, there are no margin rules. Margin rules are for overnight positions, not positions you open today and close today. There is no margin rule. So largely, the brokerage firm itself can kind of set any rule they want. And if you're a good enough customer, there is no margin. You know, just buy as many of them as you want, and at the end of the day, we'll settle up, is what will. And so that encourages this rampant speculation, casinoization in the marketplace. So if you go to the next chart, the top in red just shows you the S&P. It's just the S&P going back to 2016. Now, we could break down the S&P's gain 2 ways. What part of it came overnight? So the orange line is the cumulative change from the close to the open. So what did the market do on the open? So from the close, and then a lot of earnings reports and overnight news happens, and how did the market open? And then the blue line is from the open to the close. What was the cumulative change during the NYSE, New York Stock Exchange day session? This chart, by the way, ends in mid-May of last year. I'll show you the rest in a second. The orange line is the majority of the gain. From 2016 to mid-May of last year, the majority of the gain in the stock market came overnight. Now, in theory, you could argue that's normal. There's 24 hours in a day. The New York Stock Exchange is open 6.5 hours, 17.5 hours it's closed, and the majority of the gains came from the information that investors learned in those 17.5 hours, from earnings reports to news stories to what happened in Asia and what happened in Europe, and then that's reflected immediately in the open. So you could argue the majority of that is coming overnight, and that is normal, and that makes sense. Now, if you go to the next chart, the last chart, it's the same chart you've seen before, but now it starts in mid-May. And what you see here is there is no gain overnight. As a matter of fact, overnight, usually the market goes down, and especially since, say, the October low, overall, more than 100% of the gain has come in the stock market from the October low during the open to close NYSE day session. All the volatility that we see in the day session overnight, if you pay attention to the market, you've probably noticed, yeah, I look at the futures when I wake up in the morning and they're unchanged. And then the market opens and it goes up 2%, down 1%, up 1%. But then in that 17 hours during the overnight session, it doesn't hardly move. And so the argument people have been making is that's because there's no 0 DTE trading in the overnight session. It only trades during the NYSE day session is where it trades. And everybody is punting in these options. So what we need to, understand is the dynamic of the market is changing. I'm in the camp that the 0 DTE options are an influence on intraday volatility. It's becoming more, not less. They're half the volume in the marketplace right now. We can't really measure it, but we can see it in the market. Their volatilities are much, much higher than what we've seen. And as evidence of it, we're seeing all the action during the 6.5 hours that the New York Stock Exchange is open, and not the 17.5 hours when it's closed, like it used to be for all the years leading up until about mid-May, which is about when the Wednesday, Friday 0 options expiration took place, and right about the time, especially in October, when they finally listed Monday, Tuesday, and Thursday to just finish it off. And we had this explosion of interest in trading these. And as ISI Evercore is saying, yeah, everybody's just put your money in a money market, earn 4.5%, peel off 10%, and just go buy some calls on spiders to bet on where the close is going to be, or puts to bet on where the close is going to be, or make a punt in Tesla or Nikola or Apple or something along the line. You get a lot of leverage in that. That's why you only want to use 10% of your money. And we're back to January 21, YOLO, you only live once. And we're actually seeing some of the meme stocks start to get, exciting too, like Bed Bath & Beyond going up 100% in a day. We're back to that as well. But zero DTE is something I think real, and it's something substantial. We don't quite have the data for it, but it's something that should be on our radar screen to understand why these markets are wildly gyrating intraday like we've seen in the last few months.
Jim, thank you for your thoughts today, and thank you everyone for joining us. If you have any questions on Arbor Research, Bianco Research, or Arbor Data Science, you can contact us by emailing Gus Handler at gus.handler@arborresearch.com. Thanks again. Have a great day.